And welcome back. Some huge changes are happening right now in the US housing market, especially given the fact that average 30-year rates are over 7% at the time of filming this video, which is on the 25th of May, surging to nearly a 7-month high, which of course is absolutely insane, given the fact that home prices have increased approximately 35% from this time back in 2020. And on top of that, average rates have more than doubled over that time frame, which is of course just mind-blowing. Anyways, in today's video, I want to touch on what's happening right now according to data from Realtor.com. This is my weekly video I make based on my own analysis of their data here. So, of course, I have a lot to share. Let's go ahead and dive right in. But of course, if you guys are looking for a real estate agent referral, whether you're looking to buy or sell a house in virtually any part of the whole US, then check out that link in the video description below, which is homeandmoney.com/Jason to get started today. With that said, let's begin today's video because there's so much happening this week regarding rates and of course our housing market, making it kind of fun to make these videos because there's a lot of changes going on here. So here's the report or the article posted by Realtor.com on the 25th. And just like my previous videos, I did not even read it. Instead, go to Realtor.com/research/data. It takes you to this fun Excel spreadsheet, which I have kind of provide my own analysis, right? So in today's video, I'm going to touch on asking prices, housing inventory, or the number of houses for sale nationwide. Also the changes in new listings, days in the market, price reductions, and of course, much, much more. I'll provide a summary at the end of this video, as well as some predictions as well, especially given the fact that rates are at 7%, or 7.12% to be exact, according to the Mortgage News Daily, for people with great credit. I just can't get over that. Anyways, so for the week ended May 20th, the most recent data we have, for asking prices, only a gain of 0.7%. I've been talking about this for about a month now because this number is likely to be negative in late May, potentially early June this year. Of course, though, I am not a real estate market fortune teller, but given the fact that home prices were skyrocketing through June last year, and this year prices are increasing, but not at the same rate, it makes sense that asking prices will be negative very, very soon. And by the way, this 0.7% increase year over year is actually the smallest increase going back to April of 2020, which is obviously more impacted by COVID lockdowns than anything else. So for comparison's sake, asking prices increased by about 6.6% compared to the same week in 2019, whereas this year, a very small increase of 0.7%. We also saw a significant decrease in prices ever since really the end of March. I mean, look at this. The end of March, we saw a gain of 6.3% year over year. Now it's a very small increase of less than 1%. This also marks 23 consecutive weeks of single-digit growth of asking prices. Before that, we had about 50 consecutive weeks of double-digit gains year over year. So big changes occurring ever since really mid-December last year when comparing numbers on a year-over-year basis here. So let's talk about housing inventory, because housing inventory only increased by 19.7% compared to the same time frame in 2022. This is actually the smallest increase since last June, a gain of 19.7%. Smallest gain since last June. Also, this is about half of the gains we saw from just 1 month ago. So a gain of around 20% last week, but for the week ended April 22nd, for example, there was a 38.7% increase. Also, as I mentioned here, the change of housing inventory has been mostly on a downward trend ever since early February this year, due to, in large part, due to a lack of new supply hitting the market, a lack of new listings hitting the market, which is causing inventory levels to remain at historically low levels. One more thing I do want to add though is that at this time last year, especially in April and May last year, inventory was absolutely skyrocketing last year. Whereas this year, inventory has been relatively flat for about 1 month, which is entirely abnormal because during this time frame, we should be seeing an increase of inventory levels. And in fact, it's actually just the opposite, relatively flat over the past 1 month. Speaking of housing inventory, according to data from altosresearch.com, there's approximately 86,000 missing listings compared to 1 year ago. 86,000 fewer listings compared to 2022. That's a decrease of 25% year over year, which is pretty interesting as well because last week I reported an increase of 34%. Now it's only a gain of 25%. So as I note right here, inventory has been on a downward trend since November last year, despite increases on a year-over-year basis. Inventory decreasing in the winter months is normal, but it's absolutely abnormal to see inventory not increasing during this spring here, especially during March through May each year. That, of course, is our spring home buying season. And I'll share a chart with you guys here in just a little bit. But again, we have approximately 25% more houses for sale compared to 12 months ago. But we're down by about 54% compared to the same time frame in 2019. So get this, we have approximately 500,000 fewer houses for sale right now compared to the same time frame in 2019, which is just absolutely mind-boggling. And here's a chart on altosresearch.com's website, approximately 424,000 houses for sale. Compare this to May 24th, 2019, 931,000. And by my dumb math, that's approximately 507,000 more houses for sale in 2019 compared to now. In regards to inventory levels not increasing this spring, again, entirely abnormal. Take a look at this. I want to zoom in going back to November 4th last year. So inventory levels have been on a downward trend ever since then. We did see a slight increase in late April, but fairly flat in May, which is entirely abnormal because look at 2019. 2019 at this time, which was right about there, inventory levels were decreasing in late November. But by the time we hit mid-March, inventory levels were absolutely skyrocketing, unlike this year, of course. So for example, housing inventory increased by 100,000 houses for sale from March 29th, 2019 to May 24th that year. Whereas if you look at the same time frame this year, there's around 410,000 houses for sale by the end of March, and now there's only 424,000. Only a gain of around 14,000 houses for sale compared to 100,000 back in 2019, which is absolutely mind-boggling. In my personal opinion, one of the main reasons why we're not seeing inventory levels skyrocket is, of course, because a lot of people have very low rates right now. A lot of people who have loans on their houses have rates below 4% and 3% in some cases. And again, rates at the time of filming this video are around 7%. So a lot of people do not want to give up their low rates, but also this is causing new listings to decrease greatly. So last week, it decreased by 26.4% year over year. That's actually the biggest decrease since early April this year. This is actually in line with what Redfin's reporting, because Redfin's reporting over the last 4 weeks that new listings fell by 24.1%, approximately 92,000 new listings over the past 1 month. During the same time frame last year, though, look at that, 121,000 new listings during that same time frame. That means we're missing approximately 30,000 new listings right now compared to last year's levels. Additionally, this is a recurring problem, as I've been talking about on the channel, because new listings have been decreasing by double digits in 40 out of the past 43 weeks. Okay, let's change gears slightly here and talk about how fast or how slow houses are selling. Because last week, it took about 15 days longer to sell a home compared to 1 year ago. Again, a friendly reminder, this is based on closed home sales. Therefore, this is a lagging indicator. Having said that though, this is the 42nd consecutive week in which homes sold slower compared to 1 year ago. Now, here's another interesting dynamic happening right now as well, because last week, the number of price reductions compared to 1 year ago only increased by 8.7%. Absolutely insane, because right here, March 25th, we saw a giant increase of 105.4%. Now it's only a gain of 8.7%. Additionally, as I note right here, we've been seeing, of course, a big decrease here over the past month or so. This percentage increase has also decreased in 14 out of the past 15 weeks. I want to kind of explain this for you guys as well. In my personal opinion, one of the reasons why we're seeing the number of price reductions actually decrease, especially compared to 1 month ago, is due to inventory declining. In other words, we have fewer options for home buyers, leading to bidding wars in some markets. All right, I know that was a lot to cover in today's video, so here's a summary for you guys. Number one, asking prices in the US only increased by 0.7% last week. That was the smallest increase since April 2020. For comparison's sake, asking prices rose by approximately 7% compared to the same week in 2019. Number two, inventory levels increased by only 20% year over year last week. However, it's been on a downward trend since November last year. Of course, it's normal for inventory to fall in the winter months, but of course, highly unusual that inventory growth or inventory has not increased this spring. Also, new listings have been decreasing by double digits for 40 out of the past 43 weeks. This continued lack of new listings is causing inventory to stay at historically low levels, even though inventory is much higher now compared to 1 year ago and also compared to 2 years ago as well. There's approximately 54% fewer houses for sale right now compared to the same time frame in 2019. And number three, the average 30-year fix increased to 7.1% as of May 25th, and that's nearly a 7-month high going back to November 9th last year. Absolutely insane. Average rates 1 year ago were at 5.3%. Number four, the number of price drops from last year has decreased in 14 out of the last 15 weeks. Also, the share of price drops is at a 3-year high during the same time frame, but it's on par with pre-pandemic levels. Also, Jason fail. I just realized I didn't share the percentage of price reductions, because for the week ended May 19th, it's at about 30%. Hasn't moved very much over the past 1 month or so, because the share price drops has been fairly paid at around 30 to 31% ever since mid-February this year. Now, having said that, the share price drops at 30% right now is much higher compared to 2022, 2021, and 2020, but also on par with pre-pandemic levels back in late May 2019. Sorry, I forgot to share the share price drops pun. So anyways, it's on par with pre-pandemic levels now. Number five, houses are taking longer to sell compared to the same week 1 year ago for 42 consecutive weeks. Again, though, this is a lagging indicator based on closed home sales. So what's some potential huge changes ahead, given the fact that rates are at and above 7% at the time of filming this video here? Number one, average 30-year rates are 1.85 percentage points higher compared to 12 months ago. Also, there's a lot of challenges right now due to record low housing affordability, low inventory levels, historically speaking, elevated rates, and of course, a potential for a recession and more job losses coming as well. Therefore, a lot of uncertainty regarding our housing market and our U.S. economy as well. Number two, housing affordability is a huge hurdle for home buyers, especially compared to the past couple of years. I got a lot of flack over the past couple of videos talking about how rates have skyrocketed to around 7%. That's absolutely insane. And people were responding saying, I remember when I bought a house 30 years ago when my rate was 12%. I would say for those folks, it's not normal for rates to more than double compared to 2021. So rates have more than doubled compared to 2 years ago. And on top of that, when looking at prices compared to same time frame in 2020, prices are up by more than 30%. So we have prices increased by 30%, more than 30% compared to 3 years ago, but also rates have more than doubled as well. So we have this record low housing affordability, which is entirely different when looking at rates compared to the 1980s when home prices were at very, very low levels, especially compared to now. Anyways, let me get off my soapbox here because, again, housing affordability, of course, is a huge, huge issue right now, especially compared to the past couple of years. Also, mortgage rates have been increasing very fast in May. And of course, on a national level as well, home prices have been increasing ever since February this year. By my analysis of Redfin's data, up by about 10% when looking at the national median home sold price in the US, up by about 10% ever since February this year. Number 3, early signs of home buying demand have been absolutely all over the place this year, especially given all the volatility in rates this year as well. The most recent stats we have regarding applications for home loans to buy houses from the MBA published on May 24th was a decrease of apps down by 4%. However, when looking at pre-pandemic levels, based on my own analysis here, the MBA's purchase index, which is a measure of the number of applications for home loans to buy houses, are at the lowest levels going back to January 2015. In other words, home buying demand is still very, very low. Also, Redfin's most recent data shows that pending home sales decreased by 17% from a year ago and also fell by 24% year over year. This means that we have low demand is meeting low supply, making it feel like our housing market is competitive or very competitive in some marketplaces. In addition, the National Association of Realtors also reported on May 25th that pending home sales were flat in April compared to March. However, though, it's still down by about 20% compared to April of 2022. Also, as I noted in that video, that's actually pretty remarkable that pending home sales did not increase for existing houses in April, especially given the fact that rates decreased from the highs we saw in April. So rates decreased by about 10 basis points overall from March to April this year. However, that did not translate into more contracts being signed between buyers and sellers. Therefore, it appears our housing market this year is highly rate dependent, and of course, it's ever changing. And of course, a friendly reminder, real estate, of course, is local. Every housing market's different. And number 4, sellers and buyers have exited the housing market, leading to a dip in new listings and contracts being signed as well, especially compared to the past several years. The lack of new supply since last summer, or a lack of new listings since last summer, has led to inventory remaining at historically low levels. Again, we have approximately 54% fewer homes for sale compared to May of 2019. If homeowners continue to decide that now is not a good time to sell a house, that of course will limit housing inventory. I'm forecasting that home buying demand will fall significantly if rates stay at around 7% or more. Look for a big decrease in pendings in May and June, as well as a low amount of closed home sales this summer. In my personal opinion, though, this trajectory of our housing market is going to depend on a few factors here. One more thing I want to add regarding this as well, because it's going to depend on inventory levels, new listings, rates, as well as unemployment levels as well. And number 5, I appreciate you. Thank you so much for watching today's video. Hope you have an awesome day. I look forward to seeing you on the next video.